Good morning, and welcome to the De-Risk Global Markets Daily Brief. It's Wednesday, November 12th, 2025. The market's rate cut fever is intensifying. Yesterday's narrative, born from a data fog caused by the U.S. government shutdown, has now fully crystallized into a high-conviction bet on a dovish Fed pivot. Today, that conviction faces its first major hurdle. We're calling it the Fed Pivot Litmus Test, as a parade of central bankers is set to take the stage, and traders will be hanging on every word. This optimism is already priced into U.S. futures this morning. S&P 500 futures are trading up 0.4% to 6,897, while the tech-heavy NASDAQ is leading the charge, higher by 0.6% to 25,798.50%. The market has clearly chosen its direction, betting that bad economic news, like yesterday's dismal consumer sentiment reading, is unequivocally good news for asset prices. But conviction can be fragile. So, Alex, as this narrative took hold overnight, how did it ripple through the global session? And are there any signs of doubt creeping into the price action?
Absolutely, Sarah. The conviction is strong, but the details reveal a more nuanced picture. Starting in Asia, markets fully embraced the risk-on sentiment. Japan's Nikkei 225 rallied, closing at 51,063.31, up from its open of 50,988.53. This move keeps it firmly in bullish territory, trading significantly above its 50-day moving average of 47,004. Similarly, Hong Kong's Hang Seng pushed higher, closing up at 26,922.73, also well clear of its 50-day SMA at 26,212. For now, Asia is simply riding the wave of expected U.S. liquidity. Moving to Europe, the story gets a bit more complex, with local factors coming into play. In London, the FTSE 100 held steady near recent highs, closing almost flat at 9,898.02, just below its open. However, its position far above its 9,458 50-day SMA confirms the underlying bullish trend remains intact, fueled by growing bets on a Bank of England rate cut amid a weakening UK labour market. Meanwhile, Germany's DAX rallied to close at 24,401.84, above its 50-day SMA of 23,985. This is happening despite ECB officials warning about hot inflation and Germany's own economy minister admitting to a structural crisis. It shows the rally there is less about local fundamentals and more about imported optimism from the U.S. Now, let's tie this to the U.S. cross-asset picture where the real tension lies. The U.S. dollar index is attempting to find a floor, consolidating around 99.57. While it's up slightly from its open, it remains below its technically bearish 200-day moving average of 100.34. The 10-year Treasury yield is also holding steady around 4.12%. This tells us that currency and bond traders are more cautious than their equity counterparts. They're waiting for explicit confirmation from the Fed. The commodity space shows this divergence perfectly. Gold, the purest expression of the dovish Fed trade, rallied again. It closed at 4,135.60 an ounce, miles above its key moving averages, as investors hedge against a weaker dollar. In stark contrast, WTI crude is the reality check. It slipped to close at 60.17 a barrel, remaining stuck in its bearish death cross pattern, well below its 50-day SMA of 61.36. Oil is pricing in the very economic weakness that's fueling the rate cut speculation. Finally, volatility remains suppressed. The VIX slipped further to 17.16, a reading that signals complacency, not fear. The market isn't hedging, it's all in on the pivot. Sarah?
That's a fantastic breakdown, Alex. A clear split between equity euphoria, bond market caution, and a commodity market that's telling two very different stories. It perfectly frames today as a litmus test for this powerful rate cut narrative. Looking ahead, the day is absolutely packed with potential catalysts. The main event is a gauntlet of Fed speakers. We'll hear from New York Fed President Williams, Governor Waller, and later Governor Miran, whose call for a 50 basis point cut helped ignite this rally. The market will be desperately searching for any hint of a consensus. Is Miran a lone dove, or is he leading the flock? Their collective tone could easily validate or violate the market's expectations. Beyond the Fed speak, we have the OPEC monthly market report, which could add another wrinkle to the crude oil story. And, importantly, the U.S. Treasury will hold a 10-year note auction at 1 p.m. Greenwich Mean Time. This will be a critical gauge of investor appetite for U.S. debt at these lower yields, and will tell us a lot about conviction in the bond market. The key question remains, will the Fed validate the market's dovish dream, or will it serve a cold dose of reality? The answer will likely set the tone for the rest of the week. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.